Good morning, everyone. Welcome to today's live stream where we are going to talk about news events, right? So yesterday we had the CPI data, and tonight we have the Fed interest rate decisions. I think it's perfect opportunities to take a look at the markets, and a perfect opportunity to talk about how we are supposed to be trading these high impact news event. We're going to be looking at Bitcoin, of course, and what I think will happen with Bitcoin, and what affects the FOMC, the Fed interest rate decision might have on the crypto market, and of course on the overall legacy markets as well. But really what I want to focus on is I want to talk about how I approach these scenarios, right? First of all, before we go into the actual analysis, I want to give out a huge shout out and thank you to Prime XPT for sponsoring this channel and these live streams. If you want to sign up to Prime XPT, you can use so by using the link in the description below. You will get a 7K USD deposit bonus if you sign up with that link and use the code, which you will also find in the description. It's the exchange where I trade personally. So I trade crypto, altcoins, and Forex on one and the same. And it's pretty cool because you can use crypto as collateral to trade these markets. So I want to begin with Bitcoin here. I want to do an overall analysis of Bitcoin, kind of look at what we can expect here. And I want to today I want to start by looking at the lower time frames first. So usually we look at the higher time frames, and we go down from the weekly, daily, 4 hour and 1 hour and so on, doing that top down analysis. But I think today we want to look at the lower time frames first, because I got some interesting ranges that I'm watching. All right, guys, hit the likes so we can activate that YouTube algo. Will be very helpful to activate the YouTube algo, get more people in here so we can help more people. The idea with this channel is to help as many people as possible become consistently profitable traders. And if we're going to help as many people as possible, I need your help. And I need your help by hitting that like button so that the YouTube algo says like, oh, people like this. Let's recommend it to more people, and more people come in, and we can tell them how we're supposed to be trading these news events, which is basically pretty simple stuff, right? So we have on the lower time frames, like the 1 hour. Let's remove these levels right here. So we had a range right here on the lower time frames, where, as you can see, the white dotted lines right here. It's pretty messy range, honestly, but it's still rather interesting. We had a high time frame range, which is visible. Well, it's not really a high time frame. The high time frame one is on the daily, but this 4 hour time frame right here on Bitcoin, we had some range developing right here with range lows, range highs, and range EQ. And when we reclaimed the range EQ area here, we formed a low time frame range between the range EQ and the range high of that high time frame range, kind of signaling that it's just a sideways market, and it's not a lot of volatility, not a lot of volume in this market right now. Then, of course, yesterday we had the CPI print right here. We're going to break that down. We're going to talk about that and why we had this move right here. So what happened here yesterday was we broke above that low time frame range, right? But it's important to remember that the previous range high of this low time frame range, which is also confluent with the range highs of the previous range, is untested. We haven't really tested this level. So in my opinion, there is a high probability that price will come down here and retest this untested level right here, which is around 17.3, 17.4, something like that. So that's a very interesting area for me to watch on Bitcoin. So I just wanted to show you this low time frame range, and the important thing here is that the low time frame range here is confluent with the range high on the high time frame range as well. So I'm going to remove that right now, and we're going to be looking at the 4-hour. Now, this is the range on the 4-hour, where we have range highs at around 17.5. So this is 17.5 right here, and range EQ at around 16.6, 16.7, something like that, and then range lows at around 15 points, between 15.6 and 15.7. Now, look at this, the range high area right here, which is pretty decent. Horizontal support and resistance area is untested, right? It's not really untested, but it haven't really been tested properly. And if you look above, you have a major resistance area, and that resistance area is the range low of the high time frame range. If you look at the daily, I'm pretty sure you guys remember this area right here. Okay, so this was the range where we broke down. I believe that perhaps, I can't remember if I can't remember if I do believe that perhaps, was this Luna? I can't remember if Luna happened here or here, but I do remember Luna happening in summertime, because I remember I was out on a walk in the forest with my son. It was a beautiful weather, and I heard a lot of rumors and got a lot of alerts on Luna crash. I believe that was here. Anyway, it doesn't matter. You guys remember this range? We were ranging in here for forever, right? And it took, we was in this range for 148 days. 148 days, and we've already been in this low time frame range for 35 days. And honestly, like, you could probably view this as one big sideways range, right? And we've been in here for 183 days, 84 days, 184 days. Guys, that's pretty crazy, right? But what I wanted to show you here is that this move right here. So we had, thank you, Ahmed. Thank you, man. This is a member of the community, a trading room member as well, and a trading student for a program. Thank you for that. So we had Luna right here, and then we had FTX here. So Luna caused this crashed, which we entered that range right here. And then we had the FTX fiasco here, which kind of broke the range lows. And I think, if it wouldn't have been for the FTX crash right here, obviously, what's up, Gary? Good morning. Hope you're doing good. So if it weren't for the FTX crash here, we would probably, we could just remove this area right here, and we would probably be trading up in this region, easily up in this region, maybe even higher with the CPI print. Now, why am I talking about this range? Because it's obviously a very significant resistance area. Look at that. It's a very significant resistance area. To be able to reclaim the range lows here, we need a catalyst. We need something to bring back life into Bitcoin, and not only bring back life into Bitcoin, but to bring back life into the market as a whole. Now I'm talking about the whole financial market, because we are currently in a, if you guys haven't noticed yet, we're in a bear market. We're in a, people talking about a massive recession coming in, and that sort of stuff, right? So why did we pump yesterday? We're in the bear market. Everything looks shit. It's like everything's just dying, But so why did price of Bitcoin pump yesterday? Well, that was because the CPI numbers came out, and that is basically the inflation data for the US. The numbers comes out, and they say what's the inflation for the American dollar, and it shows that the inflation was lower than expected. Now this is important. When it's lower than expected, if it's higher than expected or lower than expected, no matter what news events it is, if it's lower or higher than the expected number, the market is going to react very, very strongly to that news. And that's what's happening. That is what happened yesterday. The CPI print came in and the numbers were lower than expected. That means that inflation came in lower than expected, and the rate of the inflation going up is slowing down, right? And it's slowing down faster than people expected. So why is that bullish? Why are people buying Bitcoin because of that? Well, people are buying Bitcoin because they're anticipating, because of the lower inflation, people are anticipating the Federal Reserve which will come out with the interest rate decision tonight, they are anticipating that the Federal Reserve in the US, is going to perhaps start quantitative easing earlier than what they've already mentioned. They might actually hike rates a little bit less than what they told us, right? I don't think that's going to happen, right? What I think will happen is they will hike with 50 basis points, like they've said. Pretty sure they're going to hike with 50 basis points. And in the press conference and in the statement, they're probably going to be very clear. Now, listen to what I'm saying, and at the same time, notice that Bitcoin is at resistance, and that it's not just a random resistance. It's like the strongest resistance on the chart right now. So what I believe the FOMC will say, what the Fed will say is, yes, inflation came in better than expected, but it's still very high. It's still very high. We still have very high inflation in the US, and we are going to do everything we can to push it down more. They're not going to hike rates more than 50 basis points because that's going to destroy everything, right? But they will probably try to calm down the markets because the Fed doesn't want to see a full-blown bull market yet. They need to lower inflation, because what happens if the bull market starts now? Well, it's going to be much harder for the Fed to control inflation. And President Biden came out, I believe, yesterday or a couple of days ago and said that the Fed's number one priority is to handle inflation. Number one priority has to be handling inflation. They have to lower inflation. They have to lower inflation. And that's what they're going to try to do. It's very high still, and they're going to try to lower it some more. So it's very convenient that this news event is coming out at the same time as Bitcoin is trading at a very strong resistance area. So let's assume that the Fed comes out and hikes rates with 50 basis points. And in the statement, they are very clear about being very aggressive still with lowering interest rates. I mean, lowering inflation. If that happens, this is going to act as resistance, and we're going lower. Well, maybe not lower, but we're definitely not definitely. I can't say definitely, but we're most likely going to at least hit this level right here, and probably even come back inside this range and just continue on this forever ranging market. Now, what needs to happen here to reclaim this level? Remember, I said that reclaiming this level, what needs to happen is a proper catalyst, a strong, dominant catalyst. Strong, dominant, like what the fuck is that? I don't even know what that is. A strong catalyst to kind of propel price higher. And that would be if the Fed comes out and says they're going to hike rates with a lower number than 50 basis points, we're going to pump like crazy. We're going to pump like crazy, and we're going to reclaim this level. Now, if the Fed says that they're going to hike rates with 50 basis points, and the statement is a little bit more relaxed and a little bit more liberal when it comes to the idea of potentially ending quantitative tightening and starting a quantitative easing cycle earlier than expected, we're probably going to pump as well. But I find it very, very hard for the Fed to do something like that, because why would they want the market to pump? Why would they want to see a bull market when the inflation is still very, very high, right? So do I think Bitcoin will pump? No. Do I think that Bitcoin has the possibility of putting in a high time frame bottom here? Yes, right? And those things can be true at the same time, because when we're looking at the CPI numbers and the FOMC, they are creating a base. You're building a base case and a scenario for long term, right? But around the same days and in the same week, you're having very strong intraday and price action that is very visible on the 4-hour and the daily time frames. But on the weekly, it doesn't really matter. So if you look at the weekly, yes, I do think that Bitcoin and risk assets is in the process. And I'll also look at this level on the weekly. I mean, it's just absolutely, I mean, look at that. It's it's hard to be bullish short to midterm here when it's so clearly at resistance with a major news event coming up. But if you look at the higher time frames, I'm not saying Bitcoin is going to bottom here, but what I'm saying is it's a beautiful area. Like it's just a beautiful area. This whole area right here for potential bottom to be put in on Bitcoin. For us to reach the 0.886 fib level down here at around 10K, for that to happen, we probably need to see inflation going back up. We need to see a prolonged bear market. We need to see deeper recession into the next year, and we need to see the Fed having trouble taming inflation. Because if the inflation numbers just keeps going down now with every new CPI print, the more confident the Fed is going to get about their powers to actually be able to control inflation. And I believe at that point we might not come down to that 10K level. So if that's the case, we are probably slowly but surely going to print a high time frame bottom in the next few months is my idea. And what I've started to do is I have a couple of stablecoin farms. Yes, strong and dominant catalyst. Thank you, man. Yeah, honestly, my English kind of cracks me up sometimes too. Like I say stuff, and then afterwards I'm like, you know what? Why am I even saying that? Anyway, what I have is I have a couple of stablecoin farms. Not a couple. I have one. I don't know why I'm lying. I have one. I don't have a couple. I have one stablecoin farm, and the proceeds, the profits from that stablecoin farm. Before, what I did before was I took the profits and I compounded that into the same farm, right? So every month I compounded the profits of the stablecoin farm and added it to the same farm. What I'm doing now is I'm taking the profits on a monthly basis and I'm putting 75% in Bitcoin and 25% on Ethereum. So that's my way of basically dollar cost averaging into Bitcoin and Ethereum, and I do it on a weekly basis. So every weekend I take the profits and put it into Bitcoin and Ethereum. So I have started to, I have started somewhat of a dollar cost average strategy here on Bitcoin and Ethereum. And the lower we go, the more cash I will add to that as well. And when the time is right, I will take that USDT stablecoin farm and I'll convert it all into Bitcoin and Ethereum. But for that to happen, we have to have that high time frame bottom, and the high time frame bottom will not be in until we have at least a daily bullish break in market structure. And we never really had any daily bullish breaks in market structure in this whole bear market. So what that would look like is perhaps something like this, right? And at this stage right here, maybe it's time to start thinking about that. But and that's on the weekly. It's even clearer on the weekly. Can extend this range. It's even more clear on the weekly where you have like, what's up, Lorenzo? Hope you're doing good. Good morning. I had to double check your profile picture there for some reason. Is that coffee? You're holding. God damn, I forgot coffee today. All right, so on the weekly here, it's even more clear, right? You want to see like a reclaim, something like this, right? And that's going to be the start. That's going to be the start of the bullish break in market structure. But we really what we need to see is something like this, right? Kind of reclaim the 25K area. So 25K has been a level I've been watching for quite some time. Now the thing is, like, that's if you wait for a reclaim of 25K, you're basically giving away 40%, right? You're basically giving away of 40% of potential profits. The thing is, I'm still I've already started dollar cost averaging in, so I will on that position I will still be making some money, and then I'll be able to like go all in, if you will, when we start reclaiming the 25K region, with the rest of the market kind of starting to form a bull market as well. And of course, that's not going to happen until inflation comes down significantly and the Fed has actually started talking about specific dates of starting quantitative tightening. All right, so that's been 20 minutes of me talking about Bitcoin. I think the analysis is quite clear here. We have basically, like, when I'm doing my analysis, it's like I've seen people, they put like 200 lines on the chart and use like all different kind of shitty indicators to tell you what's going to happen. I don't really care about that. All I care about right now is one level, and one level only. And that level is the area around between 7.5 and 18 point, not 17.5 and 19K, something like that. That's the only area I care about. And it's probably going to be acting as resistance. So let's talk about what we're supposed to do. What we're supposed to do during weeks and days with high impact news event. Let's go to the economic calendar right here. Yesterday, we had a lot of stuff going on, right? But the important stuff was the core inflation rate, the CPI data here. That was yesterday. And then today we have the FOMC economic projection, the Fed interest rate decision, and the Fed's conference. All this is the same stuff. It's the Fed interest rate decision. So first they release a document. I'm pretty sure they first released a document, talking about their outlook on the economy. It's pretty much what it says, right? And then they have they announce the interest rate decision, which you can see right here. It's forecasted to increase with 0.5%, which is when you're going to hear that they say 25 basis point, 50 basis point, 75 basis point, or 100 basis point, and you read it as 50 bps, and basically what it means is 50 basis point or 50 bps is 0.5%. I don't know why they keep saying that. Why not just say 0.5%? I don't know. And then they had the Fed press conference. Now, the way that I used to trade the Fed interest rate decision. By the way, I'm going to be live at this time on Prime XPT Academy's channel with Dirk. We're going to be trading this event live, so it's definitely going to be very interesting. The way I like to trade that live is to look at the price action when the Fed interest rate decision comes out, and then 30 minutes later, whatever this move was, I'm going to fade it at that time. So if you have a super bullish move when the interest rate decision comes, like Bitcoin just pumps, what I'm going to do is I'm going to short this pump when the press conference starts. I don't know why it works, but it works every time, and it works quite well. I don't know if you've been with me on those live trading session, but it works pretty well. Anyway, that's a separate part of my trading. That's just something I started doing on this channel for fun during the FOMC and the Fed interest rate decisions. But when it comes to my serious, real swing trading, how we approach days and weeks with a lot of news is actually not really a question of how to trade the news. It's more a question of trading psychology, right? So what helped me realize this, and this is actually a point that I figure out on a monthly basis when I do my monthly trade review. So the members of the trading room have probably hopefully seen the trading review. So if you haven't, you can see right here. So I wrote extensively my monthly trading review right here. If you haven't read it, I definitely recommend you go to the Market Update channel and read through this. There's a lot of interesting notes on that monthly review, and I learned a lot about my own trading by looking at that monthly review. So in the month of November, I took 13 trades with slightly above 3R in profit. If I removed all the trades that was marked as not according to plan, and also all the trades which had conflict with the RLZ slingshot indicator, I would only have 9 trades. So instead of having 13 trades, I would only have 9 trades. And the win rate would be around 75%, and I would have made almost 7R instead of 3R. So more than double the amount of profit, way less trades, and a very high win rate. Now, this got me thinking, right? So ever since I launched the trading room community, I've been very focused on finding finding as many trades as possible using my trading system for you guys, right? Because I want to help you guys out. But by doing the market review and the journal review, the monthly journal review, I noticed that, and I know this, right? I know this, but I think that the stress of delivering signals kind of affected me. So what I realized was I need to go back to the basics. I need to go back to the way I've always been trading, and that is being patient and disciplined and waiting for the right opportunities, and always telling myself that it's okay not to be in a position. It's okay to wake up and say, you know what? Today is a major news event. Why should I be trading this? My trading system is based on technicals, not fundamentals. So why am I going to trade a technical system when there's a lot of fundamental stuff going on that will affect my system, right? So my system is very straightforward, very simple. It's based on horizontal levels and a break and retest system. And when price hits the level, you have certain indicators to tell you about the confluence of that level. And if the confluence is good, you take the trade. Now, if you have a major news event, imagine you have an entry trigger, and right at the time when you see an entry trigger, you had the FOMC coming up. Are you going to take the trade? Of course, you're not going to take the trade, because the fundamental events, we have to, even as 100% TA traders, technical traders, we have to accept the fact that fundamentals drive the market. It's not our lines on the chart that decides if price goes up and down. It's the fundamentals. It's the for the today, for example, or yesterday we had the CPI and FOMC today. That's the stuff that drives the market, and that is the stuff that has the ability to take a trading system and a trading setup and completely reverse it, right? That has the possibility of ending trends. So the way I'm trading the news is by not trading at all. You're gonna have a lot of people losing a lot of money today, right? Tonight with that FOMC, yeah, you're gonna have a lot of traders, and they're gonna be stopped out. They're gonna lose a lot of money. Some will make some money, mostly based on luck, right? But most of them will lose a lot of money. I believe that 99.9% of everyone that tries to trade this event is better off saving that money for when the system gives them a good trade, right? So yesterday we had the CPI, and I remember being out on a walk with my son. Like, it seems like I'm always out on a walk when big stuff happens in the market, and my phone was just blowing up, right? It's blowing up. I got notifications. People DM me like, "Oh, let's shit, look at Bitcoin, blah blah blah." So what I did was I turned off all notifications. I put my phone on do not disturb, all notifications gone. Because what happened was I realized that it doesn't matter. The market can move without me. I don't care. All right. It's okay to not be in a trade, and it's okay to not trade every little move that happens in the market. So it's really, really important that you stay true to the system. If you have a system that is a purely technical system, it's okay not to trade when there's news events that affects your system in a bad way, right? Now, we did have some open trades prior to the CPI. So one trade we had going was, for example, we had this. Let's see if I had the right chart up here. Can open the right one. For example, we had one which was a trade on 80 NCD, and we managed to exit this one at break even. So I'm very happy about that, right? So we exited the trade at break even right before the or a couple of hours before the CPI, so around here. And this candle right here, you see the this 4 hour candle with the crazy wicks right here. This candle right here, that was the candle that got printed with the CPI. So if we waited, if we stayed in this trade right here, TP1 would actually have been hit here, right? But then as you can see, it reverses and would have taken out our stops here. Now, we don't know where this wick is going. We don't know if this wick is going to the downside or to the upside. Imagine if if it would be the same thing but in reverse. Imagine if we have a wick to the upside and then price starts moving lower. Now, that's the type of scenario that is like one of the most frustrating thing in trading, and it will happen so often during major news event. And it's almost impossible to predict how the news event will affect price. It's better just to stay out. It's better just to stay out. Now, another thing we're going to look at is the gold trade, right? So we were in a long on gold, and we had an idea on gold here. Now, the initial idea on gold was, let me see if I can actually find the trade in my journal right here. So just bear with me here. Where is gold? All right, gold right here. So let me bring up the screenshot here. All right, so this was the gold idea. It did hit TP1, and it came down and it hit entry right here. So we when TP1 got hit, we moved stop to entry. So we exited this one at entry. Just a small winner on gold, and that was here, right? So we were stopped out here, and when getting stopped out at entry, I talked about a potential move here for gold for a new trade. But I also said, we're not going to take this trade because we got the CPI coming up. Now, of course, the CPI data came out and gold absolutely crushed it. It just started pumping like crazy. We would have hit TP3 here on that trade if we did enter in here. The thing is, if you're watching this and you're thinking, why did we not take this trade? Because it would have been quite a nice winner. So why didn't we take the trade? Well, the reason why we didn't take this trade was because this candle right here could have as easily looked like this, right? So it's important that when you see a move caused by a news event, you have to immediately think that it went this way, but it could have just as easily went the other way, and it's just impossible to know without being an expert macro analyst. And even at that point, most of the successful and really good macro analysts I know, they wait until the news is over, and they base their long-term positions and their trading based on what the news release was and not what they think it's going to be. Because if you enter a position in anticipation of how you think the news event will be, there's a big possibility that you're going to see wicks like this, right? It's just going to take out your stop loss and then run in the other direction. So how we're going to be trading the news, with the stuff I teach in the RLZ trading room, we are, let's see, so the Fed meeting today is at, when is it? Let's see. Get a question here. It's at 1900 UTC. Press conference is 30 minutes after. So yeah, the way we're going to be trading the news going forward, and basically this is the way I've always been trading news, is not to trade it at all, right? And I haven't entered any new positions this week, or have I? Have I? It's Monday was the. Yeah, I haven't entered any new trades this week, and one reason for that was, I've looked at the news events and I basically said, you know what, not until after Wednesday am I going to look at entering new positions? And this happens, 8 in the evening for me, which means it's not really what I'm interested in. Is on Thursday, I want to look at how has the market kind of digested the news, and which directions do we have new trends, or is price following the previous trends and that sort of stuff, right? And at that point, I might get ready to enter new positions. And then, of course, you look at on Thursday, tomorrow, we have the interest rate decision from the Bank of England, and we also have ECB interest rate decision and retail sales for the US. And then, of course, the ECB press conference. So a lot of major news event tomorrow as well. And even if you're only trading crypto, the ECB press conference, the ECB interest rate decision, and the Bank of England interest rate decision can actually have an effect on rest of the market as well, if they come out with unexpected numbers or say anything totally unexpected during the press conference, because we are in such a delicate and sensitive situation now with the interest rate hiking and inflation data from around the world, especially in the euro area, US, and the in the UK. So I honestly think that the best thing for me to do is to perhaps not trade at all. Maybe if I find a pair on, I don't know, let's say um NCDJPY, like something which does not have any strong correlation with these news events right here. Which, but they probably will if it's very unexpected news stuff. It's going to affect most of the market, right? So probably the best thing for me to do is not to take a single trade this whole week. Now, as a professional trader, like I trade for a living, right? I need to make money doing this to pay my bills. Okay, so I need to trade. I trade for a living. That's what I do. And to be in that position, it's actually quite weird to say. It's basically like saying, I'm not going to be working this whole week. I've just decided to stop working this whole week, right? And it kind of goes against everything we know about, you know, making a living, working. You're not supposed to just wake up on Monday morning and say, you know what, my job is not to work this week. Obviously, I have other stuff to do, but we need to really understand that to be successful traders, the most important thing for us to focus on is, first of all, the system that we're trading, the rules of that system. We're going to be following that system regardless. And one very important part of the RLZ slingshot swing trading system that I'm trading and have developed is you're not supposed to be trading this technical system if there is major news events coming up that might affect the validity, if that's even a word, of the setup. Now, when you have a news event week like this one, you're actually following your system by not trading, and you're actually doing all the right things, and you're actually following a correct worth ethics by not working this week, if you know what I'm saying. So it's sitting on your hands and observing the markets in these conditions is the right thing to do. It's not the easiest thing to do, but it's the right thing to do. It's actually very, very hard, because there's a lot of, like, there's some interesting, like, you see this and it's just frustrating. You're like, ah, shit, I would have made money on this one. You look at GBP AUD. All right, AUD CAD. You look at this, you're like, look at that beautiful long signals, just absolutely beautiful long signals. It followed the idea. I would have made money on that one. I would have made money on this one. And watching this, it's like you have a feeling that, fuck it, let's just trade. Let's just take that trade during the next news event. But as soon as you start thinking like that, you're exiting that correct way of thinking, that correct mindset. So I believe a while back I wrote a tweet about how trading is supposed to be boring, right? And what I mean by that is you have a trading setup and you have a trading style and a strategy and a way of trading the market. You have a trading plan, a plan for which trades to take and when not to trade and that sort of stuff. You're just going to follow that like a robot, right? So when you start trading, it's going to be very exciting. You're going to learn a lot of new stuff and it's going to be very interesting. You're going to be doing lots of back testing with a back testing template like this one. By the way, if you haven't signed up to my newsletter, do that and you will receive this awesome back testing template for free on the welcome message. Definitely check that. If you haven't gotten this one, just DM me on Twitter and on Discord and I will send you a link to it if you're not a member of the newsletter. I mean, in the beginning, it's exciting. You're learning new things, and you're developing a system, and you're seeing how you're kind of improving as a trader. But you will reach a point where you have a system. You will reach a point where you, like I did a couple of years ago with the slingshot system. You reach a point where you're like, okay, I'm okay with these results. I have a trading system. I like it. It's perfect for me. I'm getting the results that I want. So what now? Well, what you're supposed to be doing now is you're supposed to be following the rules of the system like just automatically, like a system, right? Just follow it like a robot, like automatically. And at that point, what you are what you're going to notice is it's much easier said than done, and that is what you're going to be focused. That's when you start focusing on trading psychology to be able to find a peace of mind and find a place of calm and focus where you're supposed to just be able to say, you know what, this week got a lot of major news events going on, so the right thing for me to do is take a step back and not trade my system, right? And it's really, really hard to do. What really helps for me, what has the absolute best effect for me, is to do regular journal reviews. Like this monthly journal review just completely reset my mind. It really made me realize what's important in trading. It made me realize that I know now what to focus on. It reminded me of what's important. And I haven't really focused on these things this much in November. But when looking at the whole trading history in November, it kind of hit me like, yeah, okay, so I know now what to focus on and what I need to do, and that is to focus on being balanced and disciplined and really, if I can't achieve a flow state of mind, I'm not supposed to be trading. And what I mean by that is, I wake up. If I wake up and I feel like, I feel stressed, right? What I first need to do is I need to take care of that feeling. I need to make sure that I take care of the feelings of stress before I start my trading session. Because if I don't, I'm probably going to be taking trades based on that stress, right? So I'm going to be taking trades from a stressful, based on stressful emotions and from a stressful mindset. What I need to do is I need to take care of that stress. What I do is I always meditate for 10 minutes, right? Always meditate for 10 minutes to get in that, that peaceful, calm, and balanced state of mind. And not until I feel like I'm at a complete, if I don't feel like I'm at that place of focus and discipline, I'm just not going to be trading that day. So it's very important to remember. If you for some reason feel like you're not in the right place the right place mentally, is do something else, right? Just do something else until you feel like you're in the right place mentally. Because it's really what will separate you. It's like the mental approach to trading is really what separates the profitable traders and the not profitable traders. It's what separates the very profitable master traders and the slightly profitable traders, right? If I if I would follow if I would follow my system, like when I'm back testing my system, right? If I would, and the weeks when I actually do follow my system perfectly, I have double the profit and double the win rate as when I take just a few trades based on emotions, right? So imagine if you have on average somewhere between 10 and 15 trades in a month. What if somewhere between 3 and 5 of those are trades not based on your system? That's going to screw up your whole equity curve. It's going to make you way less profitable. Just by making a few mistakes in a month, it's going to completely screw up your whole equity curve. If you stay with the plan and you take all the trades perfectly, you're going to be very profitable. But as soon as you make 1, 2, 3 mistakes, you're very quickly going to remove a lot of that profit. So it's super important that you create a plan, right? Create a trading plan. And I'm not only talking about a trading system with clear entry triggers and that sort of stuff. What I'm talking about is take a pen and paper, start writing like, who are you as a trader? Who are you as a person? And what type of trading style do you want to trade? And how are you going to approach the markets? And make plans for what to do when you don't feel like you're in the right state of mind. Like you need to have plans for everything, because what trading is, it's a business, right? And you wouldn't run a business without a business plan. You wouldn't want to run a business without a very detailed idea of what you're supposed to be doing, right? You can't just come to the office. Like, imagine you have a business and you come to the office like, I don't really know what to do today. Like, I don't really have a plan. Let's just let's just try something out here. it's, that's never going to work. And that's the way a lot of people are trading. They're like, they come down to the office like, this looks good. Let's take a scalp here. Let's enter here. This looks interesting. Let's take that trade without any plan, without any plan at all. And that's why most of the people trading fail. That's why the failure rate in trading is so high. We've all seen the numbers, and 95, 90, 97, even 99% of everyone that tries to become a trader will fail. Very few people make it in this business, and that's because most people are lazy. Most people are lazy. They think that this is a get rich quick scheme. People are lazy. So if you want to become a professional trader, a consistently professional, profitable trader, understand that this is probably one of the hardest things you can ever master. This is probably the hardest task that you've tried to become good at. It's really, really hard. And if you don't love trading, if you don't absolutely love the idea of doing this every day and just following a strict, disciplined approach, then trading is not for you, right? If you don't feel like you're the entrepreneur type of person, if you don't feel like having your own business, trading is not for you, right? And there's no shame in admitting that trading is not for everyone. Like, if you feel like it's just too much, it's too complicated, it's too much responsibility, there's no shame in admitting that, right? Because it is hard, right? It's only you in the markets, right? Every mistake you make, you have to admit that, okay, I fucked up and I can't blame anyone else, right? There's no such thing as manipulation in the market. Well, of course there are, but like, you can't blame anyone else for your mistakes, right? If Euro USD or if Bitcoin USD pumps a little bit, creates a wick, takes out your stop loss, and then moves to take profit, it's not Binance's fault. It's not the European Central Bank's fault. It's your fault, because you traded probably through a news event that created that spike in liquidity. It's only your fault, right? Every mistake you make in trading is you fucking up. And the quicker you realize that, the better. And before you become consistently profitable, I believe that a lot of people they quit trading right before they become consistently profitable. And the reason for that is you need to reach a point of no return. A point of no return where you're already so deeply into trading that giving up now would be such an extreme failure. And at that point, you feel like you have no plan B. Your only plan is to become consistently profitable. If you have a plan B, you're probably going to take that plan B because it's much easier. But if you come to a point where you don't have a plan B, you will probably reach that point at a time of extreme frustration. Let me kind of explain how I realized when I reached that point. So I was going through my trading journal. So this was a couple of years ago, right? I was going through my trading journal and I noticed that, I noticed that, God damn it, I'm not making money. I'm not making money. I'm not profitable. Like what the hell am I doing? I'm used doing this trading stuff, but I'm not making any money. I'm not being profitable. And I'm some months I'm around break even, but most of the months I'm not even in profit. So I told myself, you know what, I can't just continue doing this. And the reason why there was an extreme frustration was because most of the mistakes I did was mental based errors. Same stupid mistakes on repeat. Every week, the same stuff happened. Months after months after months after months, the same mistakes was made over and over again. And that caused, obviously, a sense of extreme frustration. So I basically told myself, I gotta get a fucking grip on this, right? I gotta do stuff the right way, or I just have to give up. So I gave myself, I remember talking to my partner, and I'm like, this, I don't know if I can do this. I don't know if this is the right thing for me. And she said, like, well, maybe it's not. Maybe it's not. So I told her, all right, I'm gonna take 100 trades, right? I'm gonna take 100 trades. If I'm not profitable, or uh, if I'm not profitable, or more importantly, if I haven't followed my plan, and if I haven't, it's okay to have a small error margin. So a couple of times I could have made mistakes, right? But if I can't take 100 trades without making mistakes, I'm gonna quit trading. So I promised her, I promised myself that I'm gonna focus on doing something else if I can't figure this out within the next 100 trades. Because I knew I had a possibility. If I just stopped doing the mental mistakes, I would have been stupidly profitable during that period. So that's when it all shifted, right? That's really when it all kind of that's when I started becoming a consistently profitable trader, and that's when I realized that, all right, I'm gonna do this professionally, and I want this to be my like, I really did see a light at the end of the tunnel. Like, I saw that profitability and myself becoming a profitable, professional trader after starting that series of 100 trades, and it worked out great, right? So what I did at that point was I stopped focusing on technical analysis and I switched to focus on trading psychology. And the most important shift I made during that period was to not trade. I know it sounds weird, right? But I the first week I just didn't trade at all, and I promised myself, do not take a trade until you really find the best setups. And I actually took so few trades that I didn't even reach that number of 100 trades before I realized that I have now entered the realm of being consistently profitable, because I took so few trades. To reach the number of 100 trades, I would probably have had to trade for over a year, because I think I took less than 10 trades, um, 10 trades a month. But the difference in profitability was insane. So I went from taking perhaps 10 trades a month, or I went from taking 50, 60, 70 trades a month to 10 trades a month. And that's the biggest shift. I stopped trading and started just following the market. That's a big difference, because in the past what I did was I went down into, well, at that point in time I didn't really have an office. I just had a very small screen. I had lots of screens, but like I sat down at my desktop and I'm like, I wonder. I didn't even say like I wonder what to trade today. I basically said like today I'm gonna trade. Okay, today I'm gonna have 5 trades. Today I'm gonna have 10 trades, or today at least I'm gonna have at least one trade. So I was making plans on taking trades and the number of trades I was going to take, and basically what happened was I forced myself to take trades because I have already promised myself that today I'm going to be trading. What happened was when I shift mentality into instead saying, I sat down at my desk and I said, I wonder what the market has to offer me today, and that's a big difference. So when I started, I had the approach of taking something from the market, right? And when I became consistently profitable was when I shift mindset into receiving something from the market. So instead of taking something from the market, I asked the market for help, right? Basically, as being an observer of the market. And I listened to whatever the market tried to tell me. And I was just waiting for the market to hand me a trade instead of trying to steal it from the market, trying to beat the market, right? Instead of trying to beat the market, I basically tried to let the market give me whatever it wanted to give me. So instead of taking 70 trades in a month and not being profitable, I was given 10 trades a month and was very profitable. That's I think that's a major difference that all of you have to kind of go through. You have to come to that point of no return where you realize that, all right, it's either following the plans or just not trade at all. So this also brings me back to how we're supposed to be trading the news. Just let the news event go. For example, we have the FOMC and the Fed interest rate decision here tonight. Just let it be. Just let it be. Let the market do whatever it wants. Let the beginner traders, the ones that trade 70 times a month, like I did in the past, let them trade this. Let them try to make money by beating the market during these highly volatile times. And then when the when the storm settles, we come in and we just observe and we say, you know what, it's the storm is over, right? It's calm, not the calm before the storm, but the calm after the storm, or the whatever. We're gonna pick up the pieces and we're gonna say, the market is now given a clear runway to our target. There's no news event that can come along and just completely screw up our setups. We now know exactly what to do. We have the setup giving us setups, or the market giving us setups, the system giving us setups without any major news events in the way. So the best way to trade the news, in my opinion, is to not trade at all. And for all of this to be possible, for all of you watching this to be able to successfully, navigate the market in these highly volatile times, I think it's best to take a step back and have the approach of trading as little as possible. Like, remember, it's December. It's end of the year, December, got holiday season coming up. Like, who cares about trading? Who cares about trading? Well, we know that most of the institutions, they're not going to be trading over Christmas, right? The market kind of slows down. There's less volume. There's less volatility. Now, that is the market telling you to take it easy. So you got to be observing. You got to be monitoring the market. You're going to be listening to the market, and stop trying to fight the market. The market will always win. It's like in a casino. The house always wins. The market will always win, right? So stop trying to fight it. Just take it easy and just be very, very fluid, right? You're just going to be able to flow in and out of the market effortlessly. And to be able to flow in and out of the market effortlessly, you need to have a very detailed trading plan, a very detailed trading system with very clear rules. Follow the system, follow the rules like a machine. And while doing that, focus on your mental state of mind, which at all times when trading needs to be at an absolute state of focus, and calm. If you feel even a little bit stressed, just a little ounce of stress in your body, take a break, take a step back and say, you know what? It's not worth it. It's not worth taking a trade based on this emotion. Because when I put that into my journal and when I do my journal review, I know what it's going to say. I know what it's going to say. It's going to say, not according to plan. I shouldn't have taken this trade because of the possible effect of the stress at the time. All right, guys, I think I've said enough to kind of. I think a lot of you are interested in my thoughts on Bitcoin here too. So to kind of sum it up here on Bitcoin, we have the Fed interest rate decision tonight at 19 p.m., 7 p.m. UTC. My time would be 8 p.m. not 8 p.m. So 7 p.m. UTC is the Fed interest rate decision. And that's happening at the same time while Bitcoin is trading at high time frame resistance. One of the strongest and most important resistance on the chart right now, that is the basically reclaiming this level would reclaim most of the FTX crash. It's a very important level to reclaim. Will we reclaim this level tonight? I highly doubt it. I highly doubt it, because for that to happen, we have to have the Fed being more dovish than expected and be less aggressive in the statement and the press conference, which I'm pretty sure is not going to happen. There's a high possibility that around the Fed interest rate decision, you might see something like this, right? But it's what happens after the press conference that's going to be important. And I believe that we might see something like this. However, imagine if we see something like this. That would be very bullish. Let's see. But for all of you watching this, you're probably better off not trading this, not trading today, not trading tonight, and probably not even trading tomorrow, and maybe not even on Friday as well, because there's so much going on this week in terms of macroeconomics that you're probably better off waiting till next week to find good trades and good trends. All right, guys, thanks for watching. If you do like this live stream, remember to hit the like, hit the subscribe. And if you want more live streams like this one, I do these privately within the RLZ Trading Room as well. So make sure you check the link in the description for more information on how to join that. All right, guys, take care and thanks for watching.